consumer spending in Canada has come all the way down.
Make it harder for the borrowers.
There has been some huge impacts to the unemployment rate in Canada. Will they be in business? Do you think affordability could be a little bit more better with the Bank of Canada's decision?
I do not see that as an incentive for the developers, and it's a very hard time right now.
3.5 million more homes that need to be built by 2030.
I agree.
That's 5 more years. Do you think yourself that the government of Canada is going to be able to build 3.5 million more houses in the next 5 years?
I do not.
There are about 1,400 homeless camps just in Ontario alone. Where are all those people going to settle down? What are the insurance companies going to do?
That is what their main aim was, so that they can increase the downtrend in sales and make it a little bit above that to boost the economy. Hopefully, we pass through the tough times and be in a good position.
I think the Bank of Canada's decision to lower the interest rate was a strategic one, with the policy rate coming down to 3%. I think that's a really interesting move that they took, and I think we should all keep an eye on what's going on over there. I think this is really going to help the Canadians with the day-to-day expenses that they're having. I think a lot of has already suffered the high costs of everyday things that we are buying. The consumer spending in Canada has come all the way down. I think this is really interesting to check out in the future. What do you think, Sunny?
I agree 100%. And there are some steps that the government takes. I won't say the government, but Bank of Canada that takes. Now, Bank of Canada in itself has key pointers that they watch out for and try to navigate the economic trends accordingly. One of the main ones I'll say is inflation. If the CPI index, consumer price index, if that inflation is more than 2%, that's a big red flag for the Bank of Canada, and they will do whatever they have in their power to reduce that and counter that, to let it come down to below 2%. That's one of the indices. We also have GDP that they always watch out for. How well is the economy doing in general of Canada? Third part is employment. How unemployment affects the whole economy and general stability in the economy of Canada. And those are the things that, not there's more as well, but those are the key pointers that I believe that Bank of Canada looks at and helps to decide as to how much rate of interest they'll be charging to the banks and then to the end consumers.
Sunny, here's the thing to note. There has been some huge impacts to the unemployment rate in Canada, and with their decision to bring the interest rate down, I think we are going to see some positive notes in the economy. Here's something that we can look at, Sunny. Banks are going to charge lower rate of interest to the people who are trying to buy houses in Canada now. I think that is going to ease in for the people a little bit, if not by a lot, to buy their first house, maybe to buy their second house, maybe, or for the investors who are looking to buy either commercial properties or those multi-residential properties. Everybody is going to see a little bit of a more helpful nature in Canada. Even the lending ecosystem, maybe it has also some potential to get a little bit better. But the bigger thing we should note here is that the consumer spending, I think the consumer spending is going to also increase a little bit with the looming tariff that threats and the very uncertain nature that is going on in Canada right now. The increased uncertainty has a lot of businesses in Canada in a very difficult spot where they don't know in what direction to make their decisions in. Should they stay in Canada? Should they not stay in Canada? Should they increase the prices? Should they charge more to the customers? Will they be in business, if at all, after 5 years from now, after 5 months from now? Nobody knows. But I think lowering the interest rate is going to have some impact. And also to keep in mind, they also did this so that the consumer spending in Canada could also increase. Because mind this, when you spend more, you are not only helping the small business, but you are also helping the government collect more revenue at the end of the day, with which maybe they don't have to spend a lot more than they have to. And I think this is going to be a little bit better for everybody. Uh, What's your reaction to this, Sunny?
I agree. There's two pathways that the Bank of Canada can follow. Say either they can go and increase the rates, which would increase, which would make it harder for the borrowers to borrow, and in certainty it will also slow down the inflation that is hitting the market as well. And however, the bad impact of that is gonna weaken the Canadian dollar. And on the other hand, if you do reduce the interest rate, that is also going to have the opposite impact, which is going to be that the borrowers can borrow more money, and it's gonna increase the economic activity around, like for example, the if the borrowers have more money, they will be able to spend more as well. So in general, that's what the Bank of Canada is hoping for, to have more economic growth during those downturns. They're not expecting it to exceed when we are really doing well, but at least they're trying not to go into the recession periods. And the last thing it's gonna do is gonna strengthen the Canadian dollar as well. So those are the key highlights when Bank of Canada is deciding, and key factors that they're taking in. As of the conditions right now, it's a very hard guess for the Bank of Canada to navigate during these tough times with tariffs coming in and all of that. Is the lowering interest rate gonna help the day-to-day consumer? Yes and no. That's debatable. Is the tariff they do impose on Canada, how will that impact? Are we gonna see so much lowering of Canadian dollars by doing it that we do not get any foreign investments at all? Those are the things is going to be very debatable for the Bank of Canada to choose and pick and choose which side they want to navigate the ship in.
Moving on, Sunny, do you think affordability could be a little bit more better with the Bank of Canada's decision to lower the interest rate? Would the average citizen, would the youth in Canada be able to buy their first home a little bit better? Is it going to be a little bit easier for the youth to buy their first home in Canada now that the Bank of Canada chose to bring the policy rate down to 3%? What is your reaction to that, Sunny?
Of course, I will say this. For example, if you do lower the interest rate, the borrowing gets cheaper. So that means the consumer can borrow more on the same price that he has to pay for the same principal. So that in itself is a big boost to the day-to-day Canadian, or to the new youth that they're looking to grow, either buy a business, or trying to get their first mortgages or a second mortgages, or whatever the case might be, right? And that's the hopes for the Bank of Canada as well, that it increases the economic activity. That way, whatever spending we were going down the hill, at least the regular day-to-day Canadians are trying to spend as much as they can. That's the hopes of Bank of Canada, that they increases the economic activity, that increase the GDP in turn, and they steer the ship away from the recession. That's the hopes of Bank of Canada, and that's why they would be doing it. We do hope that gives the opportunity for day-to-day buyer to buy more products. It could be mortgages, it could be cars, it could be anything, because if the rate of interest is cheaper, there'll be more tendency for them, there'll be more ease of way for them to have a product that they're looking for, right? And that's my take on it.
I think recession is going to be a bigger part of Canada now, and I think it's going to be a bigger part of the campaigning as well for the Liberals versus Conservatives come October season, for the elections for the federal prime minister. Uh, I think that was one of the very key decisions Bank of Canada made pretty quickly to stabilize the economy. What we have yet to see is that how is that going to help Canada increase consumers' spending and bring the costs a little bit lower. Am I going on the right track, Sunny?
I think you're going on the right track, and we are also hoping the same, that as we go through these hard times during 2025, once we have those tariffs in place, we see that the government is trying their best to navigate the ship in the right direction. And one of the key important roles they're going to play is going to be in the rate of interest, and lowering the rate of interest seems like a good play to be in. That way, that gives a little bit of room for the day-to-day consumer. That way, they can spend a little bit more and not have those restrictions that a higher rate of interest has. So I do think. However, I like to point on a few things in terms of affordability. In terms of mortgages, um, there is a part of play in stress test when a mortgage is supposed to get approved, and during those stress tests, the banks test for how much a family or a household or person can then take in the housing cost, and those housing costs are usually around 32 to 40% of the total income that they have. I'm not saying 50%, but I'm saying maybe another 10% of a buffer for the person when he's purchasing the homes. And now we already know the prices of homes, they have already 30 to 40% since we saw it in 2015. So that's a big jump, and in the big jump, government is trying to relieve that a little bit. So I do hope, I do see that happening, and I hope best for everybody.
Yeah, of course. I think we are yet to see how the affordability is going to be impacted. You also need to see purpose built rentals. How much of these condominium buildings, how much of these properties, how much of these houses are being built in a place like city of Toronto, which has such high rates of homelessness, such high rates of youth who have no idea if they are ever going to be able to afford their first home in this beautiful country. Now, 8% of Toronto's already purpose built rental stock is now exempt. This is from the 2018 Doug Force decision to remove purpose built rental from a highly populated place such as Toronto. And it is expected that 25% of the existing stock is even going to be more taken out of the purpose built rental stock. This means that if there was a cap set on the rents that a landlord was able to charge, a building was able to charge the tenants, that cap is going to be removed. The current rental prices were around $1,800, and now the same price for the same condominium unit after the purpose built rental exemption was removed, they are going to soar to almost $2,200, a $400 increase for the average citizens, that they have to pay more, even less that they can spend. How is the consumer spending going to increase when Bank of Canada is coming with a different decision than what the premiers such as Doug Ford is doing in Ontario?
I agree. I agree 100%. It's going to be very tough to navigate this scenario. On one hand, you have a promising government that is trying to bring in housing affordability to the homelessness. On the other hand, you have builders that are not even looking to build in that scenario. So either A, it is economic growth that the government will have to go through, or either B, they'll have to choose housing affordability and work with the developers that are actually willing and looking to go in that direction. But however, I do not see that as an incentive for the developers, and it's a very hard time right now for any business to be in. So, is that a good direction that a government took? Is that not a good direction the government took? That is a very hard battle or a very hard debate to be on. So, let's hope for the best and see how well our economies boost up with the current situations right now, and see how things go. I'd like to point one more thing. You pointed out 3.5 million houses that need to be built, or the units, including
That
condos
is
and
by
everything.
2030. That is by the year of 2030. A 3.5 million more homes that need to be built by 2030.
I
That's
agree.
5 more years. Do you think yourself that the government of Canada is going to be able to build 3.5 million more
I
houses in
do
the next
not.
5 years?
I do not. I do not. It's very hard for me to see that how that's gonna play out.
But that is not even the main problem that I want to focus on here, Sunny. The main problem that I want to focus on here is the purpose built rentals. Where are all the homeless camps? There are about 1,400 homeless camps just in Ontario alone. Where are all those people going to settle down? That is what I want to press on here. I think the government is promising something else and delivering completely different. Uh, but moving on to the Bank of Canada's decision, do you think the consumer spending is going to increase in Canada now?
I would say consumers were already in a tough spot. They were already on a reduced budget. They were already thinking along the lines to cut whatever expenses they can, to work out. Now you'll have to understand this, Archit. If a household, if a owner has a mortgage, and they have to cut down on groceries, on fuel, on anything else, they will do it. The last point of impact would be the mortgage. So that's what the starter family, that's what a newly married couple, that's what a newly born couple is looking to be in a situation. If they bought their house to live in and it's a home for them, that's the last thing they will like to impact. And government reducing the rate of interest, I think is actually doing a good job in favoring those hard workers, and trying to back them up as much as they can. Hopefully we pass through the tough times and be in a good position.
That is hopefully sunny. Moving on from this point, what do you think? How big a role was for tariffs to influence for the Bank of Canada to lower the interest rate?
Tariffs bring in uncertainty. We don't know how things are gonna go. We do know for a fact that 70% of our even 75% of all our exports are to the US. So imagine if that leg of a business, that leg of a supply chain is cut off.
Two
How do you
hundred,
think?
$200 billion of exports, just $200 billion of exports from Canada are going to the US. Agreed, 16 billion according to the Auditor General in Canada says that we are in surplus of, but still, sunny $200 billion, almost 80% of all the exports from Canada, from forestry and lumber industry all the way to LNG, oil and steel and aluminum and all the everything else, including food, which is going to the US. And we saw some effects already. Just the threat alone caused the steel and aluminum industry not to take any new orders. I think that is going to have a huge impact with the average citizens as well, not only just for these billion and trillion dollar companies. Here's an example, Sunny. Take this. Imagine this. You have a steel and aluminum industry in Canada. They were impacted, or they are impacted, or they are going to be impacted with the tariffs. And if you have an increased price on the steel and aluminum, check this out, Sunny. Where exactly are you using steel and aluminum? The raw material from steel and aluminum, from the steel and aluminum industries are going into making the cars, are going into making your houses, are going into all the various stuff that you may not be even aware of. What is going to happen with all the things? This effect is going to trickle down. This is what I mean when I say this effect is going to trickle down. If, let's say, you are buying a car that is being built in Ontario, if you are buying a house that is being constructed right now amid the tariffs, well, here's what's going to happen. If the raw material that these companies are buying to manufacture all these products, if the cost of raw material goes up, goes up, well, the price of the end product that you are in the retail sector to buy, that is also going to go up. If you have an issue, what do you do? The first thing, if you have an issue with the product that you bought, or it didn't work out the right way that it was supposed to do, you will have insurance on it. You might go ahead and say, hey, Mr. Insurance Company, I want to claim on this defect. What are the insurance companies going to do? If the price of raw material went up, the price of end product went up, the insurance premium is going to go up. We started to see now there is a pattern. Just because the tariffs is going to impact the steel and aluminum industry, every single thing that we are paying in our everyday lives is also going to go up. I think the best example we saw was during the negotiation of the NAFTA contract. Trump came down saying in 2016 elections that he doesn't like NAFTA. He was completely against NAFTA, and all the various things that he came down on with against the NAFTA program. Uh, and what ended up happening, he still ended up negotiating a free trade agreement between Canada and Mexico. He branded it different. Changed the name to CUSMA, or whatever they're calling it these days, USCMA. But under NAFTA, before the negotiated thing was done, we were exporting milk, dairy, and lumber to the US. What has happened now? We are importing it when we have twice the capacity and ability to produce and manufacture more. The milk prices, the dairy product, the forest, the lumber prices in Canada increased by almost 50%. 50%, Sunny, and in some cases almost 100%, because Canada, despite having the ability and capacity to produce and manufacture more, are having to import now. What is your reaction to this, Sunny?
I, I, I'm in the baffled as well. When you said that we have the capacity to produce and manufacture double the amount, and we are still importing, that doesn't make any sense to me. But I tell you this: if that comes to it, and we are also um, imposing reciprocal tariffs back to US, then it doesn't give room both to Canadian citizens and to the US citizens to go it anywhere. Because if you were to buy a product from US to manufacture something in Canada, that's going to increase the end consumer as well, and same goes for the US as well. So hope for the best. The next topic that we have in play is capital gains tax. What changes has the government done to that, and how is that impacting day-to-day consumer? What are the challenges that they're going to face, and how can they navigate?
Of course, I think capital gains is something still a lot of people in Canada are completely unaware about. How do capital gain tax work? What are capital gain taxes? Uh, who has to pay the capital gain tax? If you are average day citizen, you don't invest in stocks and shares, if you don't buy investment properties, well, I think there's a very less people in Canada who have the ability to buy investment properties, let alone their own the first property. Uh, but capital gains is a very interesting topic to speak about. In fact, Chrystia Freeland, when she came out with the budget 2024 in 2023, she updated some rules on how capital gain tax will be imposed on Canadians. So here's a little bit background. Say say you own an investment. Let's say you have some money on the side, Sunny, and you decide to buy. Okay, I want to buy an investment property that you can rent it out, and down the road you plan on selling that property for a profit. You have some equity in the property, and there was some appreciation in the area, in the neighborhood, and you decide to sell that property for, let's say, hypothetical situation, for $100,000. $100,000, you bought the property for, let's say, $1 million, and you sold the property for 1.1 million dollars. Now you have $100,000 profit. Before, let's say in 2022 periodish up until 2023, how the Canada capital gains used to work. If you have $100,000 profit from your investment, the government had something in play, what is called an inclusion rate. What inclusion rate means is the tax that you'd have to pay on the profit that you had on the investment. For example, the rate that was set by the Canadian government was 50%. The inclusion rate on the capital gains was 50%. So what that means is, if you have $100,000 net profit, you would have to pay 50% of that profit in tax. Your taxable income is 50%, is $50,000 on the $100,000 property. However, there is a second thing called a marginal tax rate, which is 30%. How that works: if you have $100,000 worth of profit, you have inclusion rate 50%, which is $50,000, and then you apply the marginal rate on top of that. So 30% on the 50%, 30% on the 50,000 that you have now, which is roughly $15,000. So 100,000 minus 15,000, $85,000 is what you keep in the pocket at the end of the day, and 15,000 is what you give to the CRA. Uh, However, in the new budget that Chrystia Freeland introduced, is a little bit different. The rules changed in the game. Now, how the things work is, the whole $100,000 profit in the same example that we used earlier is going to be considered as a business income. That is no longer considered as your capital gain. There is no more inclusion rate. Now the whole profit is going to be considered as your business income. And how that works is that, since you don't have any inclusion rate, you will be there will be an implementation of a marginal rate on the 100% of the profit. If the marginal rate is still 30%, 30% of $100,000 is $30,000. In this case, $30,000 is what you give to the CRA, and $70,000 is what you keep in the pocket. See, before you were keeping $85,000 in your pocket with the inclusion rate of 50%, and now after the whole business income is considered as your capital gains, you keep even less. And that is how the everyday people are getting affected, and most of them don't even know how these things work out. Um Now, the thing you also need to keep in mind is that these capital gains tax work with the with how long you keep a property for. If now, after the rules have changed, if now you decide to keep the property and you try to sell it off in the first year before the first year ends, then of course this is how the rules will applicable, where the whole gain is treated as a business income. But still, if you try to or decide to sell the property after the 12 months are up, then the same rules will apply before, which is inclusion rate of 50% and a margin of 30. However, starting January 1st, 2026, this was actually introduced to begin in 2025. However, the Liberal government, Chrystia Freeland, she delayed it to January 2026 to ease out the new rules against citizens on and that budget stated that in January 1st, 2026, and by the way, the parliamentary budget officer also came out and stated that this will take effect. January 1st, 2026 is when the marginal rate will increase. The inclusion rate will increase from 50% to 66.67%, and that means you get to keep even less in your pocket and you have to pay even more to the government now. So that is something that Canadians should be well aware about. Most of them are not aware about this, but they should be aware about the capital gains, how these works, and how the government is stealing the money right out of their pockets. And rather than building more incentives and programs, they had this program, Canadian Entrepreneurs Incentive, where they reduced the inclusion rate to 33% up to the $2 million, up to $2 million of net profit. But these programs are still not to the level as they should be to support the young Canadians to start their first business or for them to be able to afford their first home in Canada.
I agree. Let's dive into mortgage industry impact.
Before I start off on this, what do you think yourself, Sunny, about the mortgage industry and the mortgage ecosystem in Canada?
On the base note, I feel like if Bank of Canada lowers the rate of interest, it eases out to the newcomers to the housing market. That way, they can get their first step in at an ease, and that increases the sales of houses. Increase in sales of houses means increase in sales of mortgages as well. That's the baseline. What I interpret from all of the economy trends that we see and follow. So to keep that note, in 2020 to 2021, when pandemic hit, unemployment was on the rise. That was crossed 14%, 15%, 16%. What did the government did? Government started incentivizing uh, regular Canadians to have low interest rates. That way they can have ease of spending. That way they can try to welcome a new house into into their way of living, right? And that was one part of it. Now, as you mentioned, CERB, CEBA, all of these programs, including much more, they were implemented to have a financial cushion to the overall economy, to all the businesses involved, to all the new buyers involved, to the investors involved. And that is what their main aim was, so that they can increase the downtrend in sales and make it a little bit above that to boost the economy. Now, I'm not saying that during that era that sales were rising. What I'm saying is the sales were dropping due to all of these uncertainties, and Canadian government, Bank of Canada, they were trying to push for the agenda so that the economy activity increases and consumer spending increases, in turns that leads to economic growth and increase in GDP, from what we have seen in the previous one. And same we are looking forward in going into the 2025, and that's what my whole output is right now.
You are on the right track, Sunny. Mortgage industry is going to see some impacts. Bank of Canada decided to lower the policy rate to 3%, and trust me, mortgage industry is definitely going to be affected by that. But here's the thing, in 2022, between 2022 and 2024, the housing has been in such a strange, uncertain, and weird loop where nobody knows how the industry, mortgage industry, the housing industry, the real estate sector is going to look out. The real estate developer themselves are struggling right now uh, with the condominium sales, especially in a place like Toronto. They have thousands and thousands of units that are they're coming to completion in 2025, and they have so much of inventory right now that is completely unsold. For the mortgage industry impact, this is how this is going to turn out for everyday citizens, including the mortgage agents, mortgage brokers, and the banks. The primary reason is to spark more purchases and more people's ability to sell their houses. We are going to see lowered borrowing costs for people. For example, whether where they used to pay 6% interest rates, the cost of servicing a debt was extremely high. Second, there is going to be a little bit spark when it comes to more people trying to decide to buy their first or second or third homes in Canada, which is exactly what we want, uh, to boost the real estate sector not only in Toronto but in other areas of the province and the country as well. Third, you are going to see the people who are still stuck in the fixed mortgage rates. Uh, Sunny, there is an interesting thing that you want to note here. In 2020, in the COVID era, what did the banks do? The banks decided to lower the interest rates for the people to be able to survive in those uncertain times when the people did not know if they had jobs or if they did not have any jobs. Uh, and some people ended up getting fixed mortgage interest rates because nobody, quite frankly, knew until when the COVID is going to be
Over.
over. Those people now have their renewals coming up. You bought your first property in 2020, you had a maturity date of 5 years, and now in 2025 those mortgages are going to be renewed, and those people are for in quite a bit of a rambo dance right now. They are going to see their interest rates jump all the way from those 1 or 2% all the way to 3.5 to 4%, and depending on what lender you have, even maybe 5%. uh, and that is definitely going to impact a lot of people's decision to even stay in that bubble of buying houses or selling houses. But for all the Canadians, for all the people who are deciding to buy their second home right now, who haven't made a purchase yet, who are still living in the house that they're still living in, maybe deciding to buy their new home right now, I think this is going to be a very interesting point. What do you think, Sunny?
Yeah, I agree and I hope for the best.
Guys, this is a segment for today for the Valuement podcast. I really hope you like this show. I really hope for some of you guys out there, you guys really had a chance to connect with us, to connect with the topics that we covered today. I really do hope that the Canadian economy really turns a new chapter in your lives, and you are trying to, and the people who are trying to get ahead in their lives, I think this is the perfect moment for you to take an option.
I'm on the same page. High hopes, high confidence. That is how you live your life.